The markets are moving fast. And today, we're cutting straight to the chase. What are the real drivers and price targets for gold, silver, and crypto in 2026? I've striped out the noise to give you the key takeaways from Wall Street's latest forecasts. Let's dive into the future of these three assets. Gold. The geopolitical hedge. First, gold is already above $4,300, and the outlook for 2026 is extremely bullish. The driver, it's all about geopolitics and central bank fear. Central banks are diversifying away from the US dollar, buying massive amounts of gold to hedge against global uncertainty. This sustained institutional demand provides a very strong price floor. The forecast. Major firms like JP Morgan and Goldman Sachs are highly convicted, pushing their 2026 price targets toward $5,000 per ounce, with some stress case models even suggesting $6,000. Gold is the ultimate safety asset right now. Gold is driven by institutional fear and de-dollarization. Expect sustained momentum. Silver, the industrial supercharger. This is the industrial powerhouse with the biggest potential structural shift. The driver, it's a massive supply deficit that is now entrenched. Mine production is flat, but demand is exploding due to the green energy transition. Think solar panels and EVs and new demand from AI data centers. There is simply no substitute for silver in these applications. The forecast. Analysts are betting big on the supply-demand squeeze, while the conservative average is around $55. Aggressive targets from Bank of America and others place silver in the $65 to $75 per ounce range, with some predicting $100 as the market wakes up to the scarcity. Silver is poised for high growth due to structural industrial demand and tight supply. Crypto, the institutional era. Finally, Bitcoin and crypto. Despite a recent pullback, the 2026 outlook has shifted from speculative frenzy to institutional maturity. The driver. The traditional 4-year cycle is dead. Analysts like Bitwise and Grayscale believe the market is now driven by two factors. The halving effect, the supply shock from the 2024 halving hitting its peak impact in 2026, and sustained ETF institutional money flow. The forecast. The consensus is for Bitcoin to set new all-time highs in 2026. Targets cluster between $140,000 and $170,000, with highly bullish models stretching up to $250,000. Institutional backing suggests stronger but potentially less volatile growth. Bitcoin's next move is fueled by institutions and constrained supply. To wrap up, gold is the safe haven trade, silver is the industrial growth play, and crypto is the institutional liquidity story. All three are pointing up for 2026, but for fundamentally different reasons. What's in your portfolio? Let me know in the comments below. Like and subscribe, and I'll see you in the next one.